breaking on AT&T. Shares jumping in after hours. Let's get to Julia Borston with more. Julia.
That's right, Brian. Those shares up about 2.5% on after hours trading on a report that AT&T is again exploring a sale of its DirecTV business. This, according to a report in the Wall Street Journal, which cites sources saying AT&T and its Goldman Sachs advisors have been talking to Apollo Global and Platinum Equity as potential bidders. Now, AT&T has previously explored selling DirecTV, and CEO John Stankey has discussed the importance of divesting non-core assets and the company's interest in selling consumers TV over the internet, an alternative to DirecTV's satellite TV bundle. Now, DirecTV has struggled with cord cutting amid the growth of streaming options. The Wall Street Journal saying a deal could value DirecTV below $20 billion. That's less than half the $49 billion AT&T paid for DirecTV back in 2015. AT&T tells us it has no comment on this report. We are reaching out to Apollo and Platinum Equity and have not heard back yet. Brian, back over to you.
All right, Julia Borston, thank you very much. All right, Steve Grasso. So your take not only on the news, but I want to get your take here. When I saw this headline, I immediately fired off and emailed the producers. I said, really? The Randall Stevenson era at AT&T is marked by deals that apparently just ran up debt. Now you're looking to sell DirecTV at less than half what you might have paid for it here. I mean, AT&T, comment on the deal and comment on the company and the former management team.
Yeah, so I think you were forced to, you got to look back, Brian, to the era that you're talking about. So you had, the two majors, you had Verizon, you have AT&T. Then you had John Ledger, who turned the whole industry on its head. Am I right there? So they were forced to compete. They were forced to try to gobble up, create value where they thought they could. They were trying to chase where the puck was going to be, not where the puck was. So I don't fault them for doing that, because if those deals turned into something, you would have posed that question to me. Hey, Steve, all these deals turned out great. So it's always, six, half dozen of the other. And in this one, it's hindsight's 2020. So when I look at where we're at in state of affairs, yes, you're correct. You're correct. So it didn't. So now you're looking at AT&T that has basically been flatlining at around $30. You catch a yield of just below 7%. Now they're trying to figure out, what do we do now to be competitive in the next 5 years? So to your point, you have to start to reestablish yourself, because now you have T-Mobile. T-Mobile's up almost 50% because of their merger with Sprint. So they're a viable competitor now. So it's either T-Mobile, Verizon, or AT&T. So AT&T has taken it on the chin, down 23% year to date. Verizon down 3%, and T-Mobile up 50%. Where's the next 50 going to be made? And I think since it's been so bastardized, and this story has been around for over a year now, maybe we get some conclusion to it, and maybe you could finally get a pop in the stock.
All I'm saying, BK, is this, and I'm not just slamming the former management, but I am slamming the former management, because 5 years ago, AT&T was a $43 stock. It's a $32 stock today. Hey, Verizon, at least you can say the stock is fractionally higher than it was 5 years ago. It hasn't lost, 40% of its value, even as the Dow and S&P go on record runs. Is there any reason, BK, to own AT&T stock? It's got, a couple $100 billion in debt.
Well, yeah, so that's really the issue. And so why is it up 2 or 3%? If they can get $20 billion out of this, then that's cash on the books. Maybe it reduces that debt a bit. And you're concerned about whether or not they're going to be able to pay that dividend, 7% yield or so. I think a little less than that. So that's the thing, is that you need to. That's what investors are looking at, is that how sustainable is that dividend? They know that they've got a problem with DirecTV. I mean, listen, they're going to lose $39 billion on this. I don't know what the management got paid in total over the last 5 years, but I guarantee you I could lose $39 billion for about half of what they did it for.